Today, we are covering the true costs of home ownership. Oftentimes, I take a look at House Sigma, Realtor, and I only consider the price that I see there. I'm only considering what the sale price is in the market. But when I started to do a little bit more homework, I figured out that there's a lot more costs. And one of the ones that we're going to cover at the end of the video is something that is the most shocking for me, especially the climate here for Canadian real estate, with housing prices being at all-time highs, along with interest rates climbing to those levels that we haven't seen in a very long time. So stay tuned to the end and we'll do some cost calculations. If this is your first time here, my name's Nick and welcome to Ways to Wealth. Canadian real estate is definitely a topic we have covered many times on this channel. It is near and dear to me, and I'm sure a lot of my fellow Canadians. It seems to be where a lot of people invest a majority of their assets. That's why I figured it was important to put together this video to show a little bit more of where the costs are allocated and what the potential true cost of the house is after amortization of the mortgage. But we'll get to that in a second. We'll start by taking a look at what some of the maybe more mundane costs that you may have known, but just throwing it out there just to make sure that we're all on the same page. So initial costs, this is when you're going to buy. There could be an appraisal fee ranging from $200 to $300. That's having a realtor go out and assess the value of the property. Not really happening today. Nor are home inspection fees. People have been evading this, trying to get a deal signed to kind of quickly move in the market, but that's looking at anywhere between $300 to $800. You have real estate commissions, which have definitely been negotiated, especially the way that the housing prices have increased. The percentage is based on the home sale value. This can be anywhere between 3 to 5%. I believe 6 is a little bit high. Legal fees, it's definitely not mandatory, but highly recommended. Anywhere between $900 to $3,000. Your moving costs, of course, or ask a friend. Land transfer tax, this is paid by the buyer, okay? You'll receive a statement usually 3 to 6 months after the purchase price is finalized. The amount varies from province to province, but it's anywhere between 0.5 to 3%, which is pretty significant, especially we'll look a little bit later of what the average house price is in Canada. You have a sales tax. This only applies to new homes. So if you're buying an existing home in the market, you will not need to worry about this. And then obviously, as you get into that home and you start wondering about what to improve, what needs to be fixed, maintenance, those will all go into consideration over owning that house over a longer period of time. Now that we've covered some of the costs that you may have already considered, one of the things that I wanted to highlight today is something that I wasn't really considering myself. And when I looked at, potentially buying a new house in the market, I started running some numbers. They came to a little bit of a shock, and that is the mortgage payment. It's definitely going to be one of the more larger expenditures you're going to have in your life. And I would highly recommend you doing some cost calculations before buying a home, or at least understanding from a level point of view of what the true cost of the mortgage is going to be over its amortization period. So let's take a look and crunch some numbers. We're going to take a look and start off with the mortgage rate. Mortgage rates have been increasing. The 5-year Canadian bond is continuing to rise. That is how the banks set what the mortgage rate is going to be, which means that mortgage rates could potentially even be going higher from here. But we'll take a look at Rate Hub just to get an indication of where certain companies are at, and we're going to use the big 6 banks as an example. So they're trending for a 5-year fixed mortgage at 5.69%. Now, I'm not suggesting to go variable. I'm not suggesting to go fixed. It just seems to be a standard here in Canada that we use the fixed mortgage. So let's use that for our cost calculation. The next step is to take a look at what the average prices for a home in Canada. Obviously, there's some markets that are a little bit higher than others, but just to get a coast to coast depiction of what's happening, we can see it's about $650,000. So what I'm going to do is I'm going to show you a Canadian tool, which I'll drop down in the description below. It's a mortgage calculator. It's actually provided by the government of Canada. And what you're going to do when you're taking a look at your own example is take a look at what kind of mortgage size that you're going to ask the bank for. Getting approval is a completely different story. This is what you're doing in terms of your research beforehand. So we saw that 650,000 was the average home price. Putting about 5% down, this leaves us with about 567,000. At my 5.69% rate, my amortization, the length of the mortgage is going to be 25 years. We have seen this number start to increase to 30 plus years, which is definitely outside of the norm. Payment frequency, we're going to say monthly, but you can go around here. We can even check bi-weekly depending on whatever your preference is. And again, the term is a 5-year fix. So we're going to go hit calculate. We're assuming that we're not going to make any other payments over the length of the mortgage to help drive that cost down. And we're just going to take a look at some numbers. So we see in the term, we're going to have about 130 payments. The amortization period over the long run will be about 650 payments. Mortgage will be about 1,600 bi-weekly. And then what we start to figure out is some of the nitty gritty. So over the 5-year span, we're going to pay about 60,000 off in the principal, but we're going to pay about 151,000 in interest. Okay, that is something that was the alarming part to me. And if we extrapolate this data out to the full mortgage period, we're going to see that you're going to pay about almost $490,000 on this mortgage in interest alone. Now, it is important to note that we are looking at interest rates of 5.69. We know that interest rates move. We're coming off a decade of all-time low interest rates. I don't know what the interest rates are going to do over the long run, but this is traditionally where they should hover. And especially with the Bank of Canada and the sentiment that they've had, I'm going to expect this to be, higher for longer. That's at least what they're telling me. I don't know if we see low interest rates again, but just to take a consideration of where we're at today, you're looking at about a total cost of over $1 million that you're paying the bank for this mortgage, for this home over a 25-year period, which is incredible to think. So now that we know that over the long run, if the mortgage rates stay at about 5.5, 5.6%, you're going to be paying almost just as much of the home price as you are in interest payments. Again, 567,000 mortgage, almost 590,000 that you're going to be paying the bank in interest. Now, why is this important? Now, we're going to take a look at a compound annual growth rate calculator, and it does become a little bit more feasible when you do see these numbers, but we're going to put in our starting value, which is the purchase price or the average home price in Canada. We'll also look at what the ending value is. That's what we paid in total for the mortgage alone. And we're looking at a 25-year amortization period, and we can see the compound annual growth rate is just shy of 2%. That means that your house price needs to grow at least 2% a year for the next 25 years to at least break even on the mortgage cost alone. Now, when you look at it from a high level perspective, I'm not telling you not to get into the Canadian housing market. Again, Canadians love their real estate. The only thing is that this video is supposed to be educational to make sure that you know what you're getting into if you're buying a home in this current period. Obviously, having dwelling is one of Maslow's hierarchy of needs. We need shelter. We need a place to sleep. But in reality, it's hard to believe that, 25 years is a long time. So housing prices, $650,000 house in Canada could be worth $1 million, but in reality, it's hard to see that happen. And when you put so much of your wealth into one place and you sell in 25 years at $1 million, you haven't really made anything. So it's kind of a little bit demoralizing here for me personally, being a young Canadian, taking a look at the Canadian real estate market. But again, I'm not saying not to buy real estate. I'm not telling you what to do. It's more about making sure that you've crunched the numbers, making sure that you understand the situation that we're in today, especially if you're going to make one of the biggest purchases of your life. So I hope you enjoyed this video. Let me know down below what you think about Canadian real estate. We have seen a little bit of a fall off, more listings coming on board. What is your projection for the next 12 to 24 months? And if you like content like this, we cover the Canadian real estate market all the time. Make sure to check out some of these videos here. And again, I hope you all have a great week in the markets. Happy investing.